Hello and welcome to the Islamic Finance Weekly, where we discuss relevant topics in the non-interest finance market. The most important goal of the financial system is to meet the needs and yearnings of the populace by providing the platform for access to a full array of choices to save, invest, borrow, and plan. Islamic finance offers such an opportunity to a vast majority of people, especially the unbanked and businesses, with little or no form of securities for loans. The regulation of financial institutions such as the non-interest financial institutions is a complex issue that needs broader analysis and a clear understanding of the ecosystem. On today's episode of the program, we'll be looking at strengthening Nigeria's Islamic finance industry through enabling laws. Joining me this morning to speak extensively on the topic is my guest, Mr. Abdulkabir Nasir. Abdulkabir is a certified Sharia auditor and advisor from the Accounting and Auditing Organization for Islamic Financial Institutions, AAOIFI. Good morning, Abdulkabir. Thank you for joining me on the program.
Good morning. It's a pleasure to be on your show. I hope to have an interesting session.
You're welcome. Let's start the conversation. As an AAOIFI certified Sharia auditor and advisor, share with us your understanding of the jurisprudential basis of Islamic finance.
Okay. So this is where I want to go about it. Basically, when we are talking about finance, of course, you have, when you say Islamic finance, you have two words there. First is Islamic, and then the other is finance. You just talked about finance now. We are talking about getting funds from surplus financial units to people who are in need of it. And then the only thing is that we are not talking about finance from an Islamic context. And then if you're talking about finance from an Islamic context, then you have to go back into that body of rules and regulation which governs Islamic transactions. So basically it's just for finance done the way Islam would have wanted. And then we'll talk about this. We'll talk about the body of rules and regulation governing Islamic transactions. We have to go into what is called fiqh. Fiqh is just the Arabic word for jurisprudence, the knowledge of what is permissible and what is not permissible. So it's about looking at finance and looking at what is acceptable as far as Islam is concerned in the entire structure of the financial system, allowing this to what Islam has allowed, allowing it to thrive, at the same time moving away from such things that Islam has prohibited. So basically, the rule that operates here, you follow these rules. When we talk about Islamic jurisprudence and Islamic finance, these basic rules would govern what we are supposed to do. First basic rule is this. We'll say that al-aslu fil buyu' al-hil. We'll say that the base rule when it comes to transaction is it's permissible. And this is derived from a verse of the Quran where Allah says, ahalallahu al-bay'a wa harrama riba. Allah has made transactions permissible and He has made usury interest impermissible. The underlying maxim you get from this is that, well, every form of transaction is permissible unless the one that contains usury. So when we talk about Islamic finance, we're talking about finance that eschews, stays away, avoids usury in all its forms and it's all is structure. So and then also it must eschew what is called gharar. Basically, Islamic finance is about protecting, even when you make transactions, you're about protecting people's wealth and people's hard work. So we also put any transaction that also involves what is called gharar, excessive uncertainty, is also impermissible. Under what you call gharar is what you would classify gambling under, where you find Allah saying that innamal khamru wal maisir wal ansab wal azlam rijsun min amali shaitan fajtanibuhu. All forms of gambling, transactions which involve a zero-sum game, whereby you are either losing totally or you are winning totally, and there's no exchange of counter values. This is also prohibited. So also the ethical part of it. Anything that Islam deems to be ethically impermissible, amongst which is alcohol, prostitution, and whatever Islam feels is morally unacceptable, also will not be allowed for one to make money from or money on. The Messenger of Allah sallallahu alaihi wasallam said, "Inna Allah idha harrama shay'an harrama thamanahu." When Allah prohibits something, He also prohibits any wealth that you may get from this. What I've mentioned now, I'm trying to build a structure. The base rule about transaction is permissibility. Exceptions to these are excessive uncertainty, amongst which is gambling, riba, that is interest in all its forms and in all its structure, and then anything that is deemed unethical. So all these, we say that these things are impermissible in themselves. We also have certain transactions that are impermissible, not in themselves, but because of external factors. This really don't play much role in the global Islamic finance world, but it's also essential for me to mention it when we talk about the jurisprudential basis of Islamic finance. So we have these things that are external, like things governed by time and space and the effect on society. So say for instance, if one wants to invest in the manufacture of weapons in contemporary world, whereby weapons are used in wars that are unjust and are oppressive. So it is not that weapons in themselves are impermissible, but Islam would look at it from the moral angle that you do not assist people when it comes to oppression and transgression. So you have a verse in Surah Al-Ma'idah that says, وَلَا تَعَاوَنُوا عَلَى الْإِثْمِ وَالْعُدْوَانِ. Do not assist each other when it comes to transgression, oppression, and any relationship that is deemed to be immoral as far as Sharia is concerned. So this is what basically Islamic finance is. It is finance minus riba, usually interest, minus excessive uncertainty, minus unethical practices, and minus circumstances that may predispose the individual to harm, whether it is spiritual, moral, or physical harm. So basically, in summary, that is the jurisprudential basis of Islamic finance. If I look at the financial transaction, these are the things I look out for. Is this right? Is this acceptable? So basically, that is it.
That was insightful and apt. Now let's look at the next question I have there with me is, the existence of Islamic finance has become imperative in many jurisdictions of the world, and it is expected to continue to spread in view of the increasing demand for sustainable finance across nations, particularly nations with huge Muslim population. So how do you see Islamic finance regulation and supervision in Nigeria?
Thank you for that question. So basically, when we compare with contemporary finance, contemporary structured finance, Islamic finance is still like the new kid on the block. It's relatively just growing, most especially just growing in the Nigeria ecosystem, the Nigeria financial ecosystem. So, but there's been a lot of movement with it. And then when we look at regulatory laws and institutions in Nigeria, what we do is this: in an environment that the law, basically all over the world, we have about three types of law in operation: civil law, common law, and then Islamic law. Of course, if it's an Islamic jurisdiction, there's no problem. It's smooth sailing. But in the common law system, as you find in Nigeria, fortunately, the common law system is deemed by researchers to be more receptive to Islamic finance than civil law. Why is that? Because oftentimes common law is based on judicial precedence. Unlike civil law, that if you want any law in the system, you have to have a law legislated for that. Common law environment has allowed Islamic finance to thrive, and that's what we have in Nigeria. So we have laws already backing up Islamic finance transactions in Nigeria. There's a law, BUFIA, Banks and Other Financial Institutions Act of 1991 as amended, and I think also CAMA, Companies and Allied Matters Act of 1990 as amended. These laws allowed the Central Bank of Nigeria to have merchant banks, commercial banks, and then specialized banks. And under specialized banks, you have Islamic non-interest banking, and then you also have microfinance bank and stuff like this. So the existing law, the existing Nigerian environment ecosystem allows Islamic finance to thrive. It has been a bit slow because of certain socio-political factors in the Nigeria system. So, but we've been growing. And then when you look at the Central Bank of Nigeria puts out these regulations about Islamic finance and the rules and regulations that governs it. So we are making progress. It may be slow, but definitely there's movement on issues of regulation in the Nigerian system.
Nigeria's financial system remains stable, despite the challenges because of the proactive measures and the support from the regulatory authorities. And Islamic finance industry is not left out. Thank you very much. Let's look at Islamic finance products that are regulated. Islamic finance products are regulated under the same framework. So are there any sanctions? What are the sanctions and remedies available when products have been forcibly marketed as Sharia compliant? Are there any sanctions for that?
Yeah, you see, based on some of those laws I mentioned, Bofia, Kama, Bofia 1991, Kama 1990 as amended, and then of course central bank regulation saying that, which some of this you can get it on the Central Bank of Nigeria website quite easily. So this is for a product to be marketed. And
when a product is marketed falsely as Sharia compliant.
Yeah, I'm coming to that. I wanted to just give the background of some of these laws. When for a product to be falsely marketed, it's going to be extremely difficult because of the structure of Islamic finance. Why am I saying this? Every Islamic financial institution must have what is called an ACE. AAOIFI calls it SSB, Sharia Supervisory Board. In Nigeria, Central Bank calls it ACE, Advisory Committee of Experts. Yes, I got it. So these are people who are knowledge and experienced about Sharia, about Islamic finance, who would look at the product and scrutinize it. Is it Sharia compliant? If it's not Sharia compliant, it will not fly ordinarily. So let us even before the ACE is usually established by the board members, the shareholders of an Islamic financial institution. So it's not part and parcel of the management. So, but within the management in itself, there's supposed to be a Sharia audit unit. So let's say we have a product. Let's call this product A. This product A would have actually flown outside the radar of the internal unit, the internal Sharia audit unit. Then also, it has to also fly under the radar of the ACE, also the Advisory Committee of Experts. And after this, there's also an ACE in the Central Bank. You can't launch a product until these three would be in agreement. So it shows how difficult it is for you to have a product that will not be Sharia compliant, ideally in the Nigerian system. Now let us now assume that you were able to get the product that the internal Sharia audit unit did not know was unacceptable.
Yes.
And then you were also able to escape the Advisory Committee of Experts of that Islamic financial institution, and you were also able to escape the Advisory Committee of Experts of the CBN. What happens when it's discovered that this product is not Sharia compliant? Though whatever profit you make from it will be deemed to be tainted wealth. You will not be allowed to benefit from whatever profit you have made from that transaction, and you have to put it into meritorious charity work. You get what I'm saying? So the sanction is that whenever you have tainted wealth that came from a product that is not in agreement with Sharia laid down rules and regulations, then such profit will not be allowed, the institution will not be allowed to benefit from such profits.
Which courts or tribunals or other bodies have jurisdiction to hear Islamic finance disputes?
Yeah, beautiful. So this is how it operates. We do not have.
We discuss extensively on this. What if there is any disputes among the Islamic finance industry? Do we have any courts to hear this?
Yeah, beautiful. This is the beauty of it. That was why I mentioned the issue of the common law system earlier on. So this is the way it works. Some of these Islamic financial institutions that have seen their document, some would say that when there's a dispute, and also AAOIFI has a standard on this called at-tahkim. I read AAOIFI documents in Arabic. So this arbitration or mediation. some Islamic financial institutions opt for arbitration, some opt for mediation between you and then the customer or whoever is engaged in that transaction that is under dispute. Now, if this fails, then we will need to go to a court of competent jurisdiction. And then the Nigerian law, the common law is very flexible. We will require that somebody who is knowledgeable about Islamic finance will either sit as a judge or be what is called an assessor, somebody who would assist the judge in understanding what exactly is going on. So it's covered ideally on paper, of course, that this is the way it goes. But we still crave for specialized courts, like you find in BOFIA, the Banks and Other Financial Institutions Act of 1991 as amended. You have this special courts for financial for field bank and stuff. So we hope that there would also be specialized banks to also handle this. But for now, what is opted for by Islamic financial institutions are mediation for some, arbitration for some, and if it is not resolved at that level, then it is opt for the one will now consult the court of the land, which also would have to either get somebody knowledgeable about Islamic finance to be the judge, or have an assessor who will be able to assist the judge in understanding the nature of the transaction.
We need most lawyers in Nigeria to know more about Islamic finance. They need to learn more about Islamic finance. Most of them don't even have the idea or the knowledge.
Yeah, but the thing is this, we have certain parts of the country that do not offer common law alone. You have people who study Sharia and common law. So this, even if they don't know the nitty-gritty of transaction, it's far more easier for one to explain to them that this is what is going on. And also even in places like the United States, where it operates civil law, and some other places, you can still go to court, explain the parameters of transaction, and then one will still get justice at the end of the day.
Thank you very much, Mr. Abdulkabir. Thank you. That was very insightful.
You're welcome.
So now, charging and paying interest is banned under Sharia law. Islamic Finance Institution instead invest in infrastructure or other types of projects and share risk and earning with the clients. Is this a sustainable pattern, and what are the prospects for diversifying into other sectors like education, housing, healthcare, amongst others?
Yeah, this is a very good question, and it shows how Islamic finance can be adaptive and then accommodate environment and acclimatize or be accommodated or evolve to solve problems that are new in the environment. Yes, the only difference between conventional finance and Islamic finance is what I mentioned earlier on. So if one is brilliant in law, you always have alternatives. This is, we call it structuring in Islamic finance. It happens in two ways. We take an existing transaction, and then we would remove the non-compliant aspect of it, the Sharia non-compliant aspect of it, and then you have a Sharia-compliant alternative. And then the other method, let's call this A, the other method is to develop something totally new. So I give an example. Take, for instance, conventional banks may give things like car loans, housing loans, and stuff like that. So what if I want to get cars for people, what do I do? Now I go into what is called a murabaha. It's called a cost plus transaction, whereby the bank would actually acquire the car and then sell to this customer under certain rules and regulations that would guide the transaction. Ultimately, this person needed a car. Instead of going to a bank and getting a loan that he will pay interest on, he is going to actually have an Islamic financial institution buy the car. Car comes into the possession of Islamic financial institution. The Islamic financial institution sells to him ultimately. So it is workable. The problem we have is with greed. for people who believe that, well, they still want to have their cake and eat their cake and have it. So these things can succeed, these things can work, and it has been working actually in some places. But the problem we've been having is for people to carry out conventional transactions and just slap Islamic finance on it. So they say, okay, so they run just you give people loans and you just, the only thing is just is Islamic Murabaha. No. There are certain parameters that must be recognized before this product is said to be Islamic compliant. So yes, the removal of interest does not mean that Islamic finance cannot thrive. It can, and it has been. So that's about getting stuff for people. So also in education, I'll give another example. Oftentimes, and this also applies to what we call SMEs, a lot of schools, a lot of privately owned schools, some of them Muslim schools, struggle to buy basic stuff. It's not that if you look at their account, if you look at their books, for instance, their balance sheet, their profit and loss account and stuff like that, they can actually pay these things. But at the beginning of the term, they have problems getting books, getting textbooks, getting uniform. So if I am an Islamic financial institution focusing on this type of SMEs, I come into place and say, look, okay, I get these books for you, it comes with my possession, and I sell to you. You pay me in installment, and you are going to pay me this. This is the amount I'm offering you. So it's going to be structured in such a way that I'm not going to give them money and expect profit on it. I'm going to go into a transaction with them, and it's going to work out at the end of the day. I make my profit, and there's no interest. So it can work. It's about people really being sincere about it and following the rules as laid down by a lot of these institutions we have now.
Thank you very much, Mr. Abdulkabir Nasir. Indeed, we need a robust policy regulatory framework to complement the work already done by the Islamic finance industry. We appreciate your intervention in Islamic Finance Weekly. We appreciate your deep knowledge about the subject matter. We appreciate your expertise. Thank you very much for coming on the Islamic Finance Weekly. It was nice
You're welcome.
Conversation with you.
Thank you.
Have a nice day.
Thank you. And you too. Thank you.
Bye. Since Islamic finance is based on several restrictions and principles that do not exist in conventional banking, it is important to provide enabling legislations that support the growth of the industry, especially in emerging economies like Nigeria. This will require effective provisions in the proposed repeal of Investment and Securities Act of Nigeria and increased collaboration between Islamic finance professional bodies like the AAOIFI and regulators like the Securities and Exchange Commission and the Central Bank of Nigeria to strengthening the institutions. And that will be all for this edition of the Islamic Finance Weekly. You can visit our website, crochet.co, to watch our videos, news reports, and articles. Till we come your way again, thank you for watching and bye for now.